CDs don't just end. What happens at maturity can cost you money. When your CD matures, many banks treat it like cash that's now free to move. The funds often show up in your linked checking or settlement account, and you can withdraw anytime because the CD's penalty rules are over. Your original rate stays the same up to the maturity date, and interest still accrues daily until it posts. You usually don't sign anything to access it. And if your balance spikes, FDIC coverage can automatically expand across account categories. The maturity date is the switch that changes your CD from locked to decision time. You'll typically get a notice ahead of time, but the real clock starts on the maturity date with a grace period. During that window, you can withdraw or transfer the money penalty-free because early withdrawal penalties no longer apply. You can also change the term or add or remove funds, depending on the bank's rules. If you do nothing, many CDs auto-renew by default. Most maturity surprises happen because the default is auto-renew and the grace period is short, often 7 to 10 days. If it renews, the rate resets to whatever the bank offers for that term, not what you had before, and that gap matters. Even a 1% difference on $10,000 is about $100 per year. Miss the grace period and the early withdrawal penalty schedule starts over. And similar term isn't the same. 12 months versus 13 months can pay differently. Your best move at maturity depends on what you need next and not what you needed last year. If you'll need cash soon, don't renew. Keep it liquid so you're not forced into a penalty later. If you want certainty, rolling into a new CD locks a known rate for a new term. If you want flexibility, a savings account lets you add and pull funds without term rules. For higher yield with access, consider a money market account. And if you're balancing access and yield, build a CD ladder so portions mature every few months, after confirming the bank's auto-renewal settings first. The simplest way to avoid a bad renewal is to treat your CD like an appointment. Confirm the maturity date, then update your email, phone, and mailing address so the notice actually reaches you. Set 2 reminders, one about 30 days before, and one a few days before maturity. Ask the bank exactly how long the grace period is and what actions are penalty-free. Verify the default renewal instructions in writing, then choose your payout method: transfer, check, or move into another account. A short grace period, often 7 to 10 days, can decide whether your money stays flexible or gets locked again. BankingHub can match you to accounts and CDs based on how you actually bank and show the real dollar impact for your balance. Free, takes about 2 minutes, and the link is in the description.